Oh, aloha everyone, Joshua Hayes at BigWaveTrading.com. I have not prepared for this video at all, going off the cuff. So I just want to go over the overall market and just let you guys know the negative divergence that started to show up on November 20th via the hourly charts. You can see here, I just have the TSV and MACD indicators here for now. And I just want to show everybody that since this rally has been going, price is all that matters. You got that nice 21 EMA touch and then a bounce off of it. Thought we would come in much further. Still believe we need to fill this gap, or this gap. And I think it's just safe to say one gap will do, but that gives us room all the way down to 440. Now, I want to let you guys know, we get that pullback. I only want to be a buyer because on the higher time frames, weekly, we're good to go. I know that this is now flip-flopping between green and red, but the main moving average line is above the zero line. That along with the green tells me that on a weekly time frame, I want to remain bullish. We came out of a squeeze. We are still releasing higher. We have not printed these blue bars yet that indicate that we should expect the market to turn. We should expect this market to continue to melt up. However, we know how this ends. This always ends the same way. This past week, actually, I've been doing a lot of complaining, and it's by my nature. I kind of have it in my DNA and genetic code on half of my family to be a complainer, to just complain. Like, even when everything's going well, I like to complain. It's just what we do, so that's what I do. What are you going to do? At least I live on Maui, so, you know, I have a good release for it. But I want to let you know the same thing happened back here in August of 2022. I complained and bitched and moaned about this last leg. How did that happen? How did that turn out? In 2023, I bitched and moaned about this last leg in July. How did that turn out? I have been warning about negative divergence to about here. Now I've been bitching and moaning basically since there. But look at the time segment volume on the daily and look at the MACD on the daily. If we roll over, we are confirmed here. On the daily, we're also entering a squeeze. However, until you actually break down below the 21 EMA, you have to assume, even with negative divergence out there, we'll continue to move higher because on the weekly time frame, and this goes for all the indices, IWM is a bit different. So the IWM led us higher. So it's the one that we need to pay attention to on the downside, and it is weaker short term than the other indices. But that being said, once again, short term bearishness in January and February is normal, and in March is normal. And then in April, bullishness again. If the IWM can just pull back to any of these moving average lines where you're starting to see a little bit of confluence around the 180 to 185 level, I want to get long. I'll be looking to get long. Why? Because on the weekly time frame, once again, this is not proper yet because we are below the zero line and we have returned red. But on the MACD, we're green. So, it's kind of a slingshot. We're good to go. It's just wishy-washy, and we should expect that, guys. We're not in a QE market yet. The Fed has rhetorically, verbally pivoted, but they have not officially pivoted via an actual systematic rate cut through the system. Until that happens, it's going to be a weird uptrend. Very extreme, very volatile, and we should expect to get whipped. But like I said in the last video lesson, something very constructive has happened for the first time since 2021. All of the indices have gone from red to green on the monthly time frame TSV indicator. And once again, look at this chart and look at every time the monthly TSV is green and look at what the IWM has done. Look at what the SPY has done. Every time that indicator is green on a monthly, especially whenever it lines up with the MACD on a monthly, look at what the market has done. QQQ, DIA, SPY. So that's all you need to know. So on a daily, I continue to look and expect this market to pull back. I will not fight it as long as I'm getting long signals, which I have been all week. I got one for you guys at the end of this video lesson along with the hedge. I even got a hedge. So I got one. And it's possible the hedge might trigger and the long might trigger and they both might fail. The hedge might not trigger and the long might not trigger. The hedge might trigger, the long might not trigger, then the hedge fails. So you have to decide which of these trade ideas to take. I am giving them to you because I am personally taking both of these ideas at the end of the video lesson. But before we go there, let me show you the hourly time frame on my Thinkorswim charts on the SPY. All right, this is the hourly time frame of the SPY. This is my SPY trading window. So right here, you can see we start the red stair stepping down. It's not green and red on the stair step down like here. Before, by the way, it rolled over, but it's just steady red. This was the negative divergence that told me price should not be above the 50 SMA with this indicator below the zero line. But as long as it's trending down and above the zero line, you don't fight that. But right here, we go below the zero line on the hourly, and despite that, we don't sell off. We break out. And this is why price is all that matters. Technical indicators are tertiary indicators. Price is primary. Volume is secondary. Everything else you see on my video lessons, you could remove that and I will be okay. It is a green light, red light means go. And it tells me how much conviction I should have one way or another, safety measures, blah, 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 that I go over every weekend video lesson. So price breaks out. Doesn't matter, no, that the indicator is below zero. So technically, price should not be above this 50 SMA with this indicator below zero. And as long as that's the case, you can have a sell stop right below the 50 SMA. And as you can see, that sell stop never triggered you in. This indicator, the tickets indicator that we give all quarterly platinum and lifetime members of bigwaytrading.com, all you got to do is email. And in case you guys don't know, this indicator, somebody sells it for a disgusting high price. Disgusting. I liked it, refused to pay the ridiculous amount, had my coder work on it. He figured it out all on his own. And we've created this indicator. And it's actually based off the MACD. So you can create it on your own. It's based off the moving average convergence divergence. But we give it to members of Big Way Trading for free as part of your membership. All you got to do is email tickets. That's why we call it the tickets indicator. He created it. So it reclaims the zero line. Price is above the 50. You can't be looking for shorts anymore. So that's just the way it goes. Price continues higher. You're above the zero line. It works, it works, it works, it works. Now we're below the zero line. Price is above the 50. Price should not be above the 50 SMA if this indicator is below the zero line. And what happens? You get your sell-off. I do not play the hourly, but I told everybody and showed everybody how the hourly worked if you could have played the SPY. Now here we are. We're bouncing. We're rallying. We're moving up. We have the green stair step, which is good. But look at what's rolled over. TSV is rolled over on the hourly, but the moving average is still above zero. So once again, we're not 1,000% aligned. How much conviction should I have, up or down? That is up to you. Me, when I start seeing stuff like this, my bias would be to the downside. I'm below the zero line here. I'm red here. I have rolled over and I'm dark blue here, squeezing. This squeeze, I think, should resolve itself lower. If it does not, will I be, oh, I'm right and the market's wrong? Wrong. You buy the breakout above 478.60 with a stop below the 21 or 50 SMA. Now, technically, this indicator should not be below the zero line if price is above the 50. Price is above the 50 on the hourly. The tickets indicator is below the zero line. So what you can do each and every hour is put a sell stop below the 50 SMA, and maybe, just maybe, this crack happens. Your cover, your buy stop would go right here. So if you went short this 50 SMA crack, your get the F out of this trade is right here. The high of the day of the candle break below the 50 SMA. Just like right here. If you go short here, and if for some odd reason you don't cover on this reclaim of the 50, this is your final stop right here. And then you avoid this last leg. So, sell stop below the 50 SMA if you want, with the tickets indicator below zero. I'm on the other end because of what I showed you with the weekly and monthly. If I get a dip below the 50, if I can get a reclaim of the 50 with this tickets indicator above zero, I swear to God, guys, I am not bullshitting you on this video lesson. All of my long-term accounts that have any cash on the sidelines, all in. And I will do that on every 50 SMA reclaim signal. However, I don't play the hourly. I'm telling you how to play the hourly. I'm going to do this on the daily. So this is the 50 SMA. If at all this price can get below the 50 SMA and we can hold above the 0 line, buy stop above the 50 SMA, and any cash that I have on hand, it's all in. And let's pretend like right here, this was lined up. Let's say the tickets indicator was well above 0. We're below the 50. I'm long here and taking profits up. And I got to be honest, after a few candle extension, um, I'm probably at least doing minimum half of my stops at break even. And then as you can see, eventually fails and doesn't work. But whenever it does work, let's pretend once again, you don't have to pretend. The tickets indicator is above 0. You reclaim the 50 SMA. You get long above the 50 SMA with that tickets indicator above 0. And look what happens. From 390 to 455. Let's take a look at the new long signals. CNXN is going to be the first one. We're going to stick to the toss charts on a daily. You can see that we're right at support. If I show a little bit of a longer chart, nice stair-stepping consolidation, We'll look at telechart version 21. We're right at support at the 50, candle over candle. There's a volume surge, and as you'll see, there's a mini bop surge with a pocket pivot point signal. Now, obviously, since we're pulling back, TOS indicator is going to be trending down, TSV is going to be trending down, TTM momentum is going to be trending down. Still, we're above the 0 line here. We're above the 0 line here on the moving averages. And as you can see on the weekly time frame, if you look at this, we're green and we're green. So I want to be a buyer. So I'm going to get long CNXN above the high of the day. My buy stop will be at 64.89. Probably don't want to pay more than 65.50 for it. My final stop will be below 62.78. And I'm going to probably calculate my size. I got to give myself some room, some porosity. In a hot market, I have no problem calculating my size from this low and risking to this low. In this tape, I want to give myself some porosity in case something unexpected happens. So I'm going to be risking to this low, or calculating my size to this low, risking to this low. And then FAZ. This is my hedge. So FAZ on the daily, if you can see here, tickets indicator goes above 0, but you can see that it starts to trend higher before the move happens. Tickets indicator starts to trend higher before the move happens, even below 0. So I'm not too worried about this tickets indicator being below 0. The TSV, hey, green. Every time that we bounce, it's green. So what I have here is a candle over candle, got a mini squeeze, going to get long above the high of the day, 13.99, and I'm going to risk to 13.29. If this triggers and fills, though, on Tuesday, because I'm going to go a little bit bigger in this one, I'm going to put a stop below Tuesday's low of day, then a stop here, and then a stop here. So I'll have 3 stops on the trade. Whatever Tuesday's low of day is, Friday's low of day, and a final one right here to make sure that I don't lose a full R on this trade. And then I'm going to show you what it looks like to me on Telechart version 7. All right, guys, this is Telechart version 7. Been using it my entire life. So I just want to show you Abercrombie & Fitch, since it's volume truncation, not max green bop, which is so unfortunate because, oh, look, no red bop. Probably should have put that on my radar. Oh, well. You can see how it's been trending higher. CNXN PCCC is the old ticker to this one. It's not the same, but the uptrend is pretty clean. I'm not used to seeing such a clean uptrend on Telechart version 7 charts. And you can see it's right off the 50. You can see the pocket pivot point signal. You can see the pocket pivot point signals during this previous uptrend. Yes, there are some above average volume days, but the key difference here, why this is a long signal for me Friday, I didn't have almost any stock give me a candle over candle signal on heavier above average volume with a pocket pivot point signal that had any sort of a mini volume surge or a mini bop surge. This was the only one. And then this is what FAZ looks like to me on Telechart version 7. I have that candle over candle, volume truncation of this previous high volume bar right here. Look at how it makes it smaller. Then another volume truncation. We call this back-to-back volume truncations. Now, this is an ETF. It's not as significant, but I want to show you a stock that actually is triggering a 50% sell signal following Friday session that did that, for instance. So, volume truncation, second volume truncation. You don't want to chase it here, do you, at 255, right? Well, we, quote, quote, chased it. And as you can see, from that entry to the highs, a 100% gain. So we love the volume truncation. What I prefer to always see, though, is max green bop with the volume truncation for the back-to-back max green volume truncation days. But with a hedge, it's going to be different. So that's why FAZ is there. And then the final thing that I want to show you is on Telechart version 21. So we're going to start with CNXN. First off, this is the monthly triple green, just released from a squeeze. Thumbs up. This is the weekly triple green. That's what I like. Daily. This is what I like. Oversold. Now, this is not your Wilder's RSI. This is Telechart RSI, but we're oversold before the signal. Awesome. FAZ. So, FAZ, before this rally worked, what did FAZ do? It got oversold. Before this rally worked, what did FAZ do? It got oversold. FAZ has been spending a long time oversold, was recently oversold, now getting those signals. Do you see how I aligned it all up, guys? Now, will FAZ work? I don't know. Will CNXN work? I don't know. Am I going to add a little bit more size to FAZ because my risk is low and I think the market's near top? Sure. But CNXN is the better setup. It's just the tape we're in right now, guys. Those are my two best ideas. Thank you all for watching this long video lesson. I hope you learned something.